All right, traders, it is the 28th of August, 2017. My name is Jameson. I wanted to share some observations that I saw today, and I was going to highlight these things during the co-hosted ATAS webinar today using the cluster searches and some of the wave rulers that we have. But for whatever reason, we must have some technical errors. My link didn't work, didn't receive some emails. But regardless, this is using the ATAS software, and we're looking at a 60-minute candlestick chart. I've just made them invisible so that we can see the some block trades and some areas of interest here. So JP kind of spent some time with me doing some informal mentoring to set up these filters, and it's very useful. And I just want to kind of echo what he has hopefully put out today during his webinar, and show you some of the usefulness and some of the transparency that the software provides. So again, we're looking at a 60-minute candlestick chart here. The next indicator that I have down here, this is nothing more than volume. Instead of looking at the actual histogram or the volume bars, I have it set up for lines here, and that allows me to see, to distinguish for me a little bit clearer objectively the difference in buying and selling. Down here, this is the same thing. So this is volume, except I filtered it so that volume would be shaded based on the delta. In other words, although this looks like there is a lot of selling, the delta, the difference between the bid and ask, was actually positive. There's a little divergence there. Now this next indicator is just the cumulative delta. So this is, the cumulative difference between the bids and asks. I look at this as buying pressure. So let's take a look. We have these transparent candlestick charts that are here, and we can see that we have some, some yellow marks, some pink marks. What is that? So if I actually go here to the indicators, I come through the cluster search. Let's see here. That's the wrong one. I have a couple cluster search. It takes a few of these set up to filter information properly. So this is a cluster search, and you can set these up through volume, through time. The first one that we're going to look at here is volume, and I have a minimum value of 2,000 contracts, and that's the pink. So the pink highlights that are here are showing us that there are block trades of 2,000 contracts or more that are being pushed through on these 60-minute candles. Now the next one that we're going to see here are the yellow ones, and the yellow ones represent block trades that are between 1,000 to 1,500 in size. So you don't want to kind of look at something and just kind of create a bias, but essentially it allows you to see whether price is accepting that range or denying that range. Not all the information that's on the candlestick chart throughout a day is of equal importance. So at least it kind of highlights, hey, look, we're seeing some activity. This is a key session. This reference range is more important than some of the other range that we see. Let's kind of focus on these areas of interest that are here. So that explains what the yellow highlighted areas are and what the pinks are. So again, the yellow is block trades between 1,000 and 1,500 contracts, and the pink is 2,000 or higher. So now what are we looking at here with the the red triangles and the the green triangles? If I come down to these other cluster search filters that JP helped me build, instead of me using volume, we've set this up using time. So why is that important, or how does that display information differently? So we're looking at time, but we're looking at a very small window of time. So the minimum value is 1 second. The maximum value is 7 seconds. So what we're looking at is a quick 7-second period of time. So what are we looking at for that small window in time? We're looking for an imbalance. And for this one, we're looking for a bid imbalance. So we're looking for a 95% bias to hitting the bid. And that actually is highlighted as red, okay? So if somebody's hitting the bid, that is generally somebody coming down and they're taking the what buyers are selling, and they're doing so quickly. So if somebody's hitting the bid very aggressively with a very large imbalance, within that 1 to 7 second window, that is set up to occur on a bearish candlestick. So these will occur more frequently if you do set it to any standard. But if you put it for a bearish candle, it kind of limits the information. That way it is only presented in a manner that is, I view, a little bit more actionable. So they're hitting the bid. All right, now the next filter that we see here is set up the same thing. We're looking at time, looking at a time period between 1 and 7 seconds, and we just had to set it, I guess, to a negative or inverse bid, because it's on the other side of the footprint chart here as far as the bid-ask profile. So this means that somebody is now taking the offer, and we have this as green to occur in the bullish candles. So what we're looking at here is gold, and again, this is a 60-minute chart. So the interesting thing is here that we saw a quick ramp up, and we saw a lot of hitting the bids and big block trades, which means they're running the stops, and prices broke back down. And again, we saw now some dip buyers, the same activity, but we did not see any more kind of hitting the bids that presented here. Now, I think in addition to using the the cluster searches both in volume and in time, when you set volume up in this manner, it kind of helps create another kind of bias or idea of what's going on. In other words, you see this. Obviously, this is very volatile and certainly would create an emotional response and stop anybody out. It's very difficult to kind of hold a position here. But if you look at the volume, you obviously can see that prices are breaking down. This is associated with a lot of volume. It's very bearish. Increased ease of downward movement, closing at lows, associated with a lot of volume. But now when you look at the volume through the filter, we can appreciate that there's a buying imbalance. They're hitting the stops, they're pushing prices down, they're creating some liquidity, and it was bought. And as a second validation measure, you can see that there's actually an increase in the cumulative tick. We're actually seeing some higher highs, some higher lows. So we're seeing some buying pressure on this dip here. And now you can see that they're actually taking the offer here. They're filling their positions. This is very bullish. And then prices essentially rally back away through here. Now we can see that we rally higher with expanding volume, but now there's kind of a negative imbalance. But the cumulative tick is kind of disagreeing with the information that's here. So it definitely takes some judgment. The cumulative tick kind of continues higher, and we rally away and we break out of this trading range. And as you can see tonight, that the cumulative tick kind of continues to trade higher. And matter of fact, as we had this new cluster here, we had some nice bullish expansion in volume that actually showed a selling imbalance, as there probably was a lot of profit taking and decreasing risk into the close of market. And now, of course, we have some global instability and some more narrative headlines, and prices continue to trade higher. Despite the the little imbalance that presents here, the cumulative tick continues to the cumulative delta continues to climb higher, and that supports the ongoing buying pressure that's present, and that's rewarded by a nice breakout this evening. It's something that I was hoping that I could kind of highlight briefly during today's webinar. I hope you found that useful. Good luck, traders.